All right, let's talk about a name everyone knows, Hershey. I mean, when you think of chocolate, right, that's probably the first name that pops into your head. It's a true American icon, a brand that's been around for, well, over 100 years. You've got the Kisses, the Reese's, these aren't just candies, they're legendary. But here's the thing, we're not just browsing the candy aisle today, we're looking at Hershey from a different angle, as an investment, a company you can actually own a piece of. And, well, things are getting pretty interesting because this giant is up against some really tough challenges. So that brings us to the big question, right? If you're an investor, you've got to ask, is Hershey in a sweet spot, or is it actually in a pretty sour situation? It's really this classic showdown between its amazing long-term strengths and some really intense right now pressures. And this is basically the whole story in a nutshell. You've got two completely different ways to look at the company. In one corner, you have the bull case, the reasons to be optimistic. We're talking dominant brands, a smart move into salty snacks, and a history of really taking care of shareholders. But in the other corner, you've got the bear case, commodity costs that are just going through the roof, customers who are super sensitive about price right now, and a ton of competition. So let's unpack both of these, and we'll start with the good news, the bull case. Okay, so the bull case, the whole argument for why you'd want to invest in Hershey, it really boils down to one simple, incredibly powerful word, dominance. I mean, look at this. In the US, candy and chocolate market, which is huge, by the way, Hershey is number one. Not in the top three, not a major player. They are the player. And that's not something that just happened overnight. It's like they've built this incredible fortress over decades. And the walls of that fortress? They're built from brands like these. Hershey's, Reese's, Kisses. Come on, these are more than just products. They're part of our culture. And that loyalty gives Hershey a kind of superpower, especially right now when everything costs more. It's called pricing power. It means they can raise prices. And let's be honest, you're probably still going to buy that Reese's. A generic brand? Not so much. All of this together, the brands, the distribution, the scale, creates what investors love to talk about, a competitive moat. Think of it like a real moat around a castle. It makes it super, super hard for anyone else to attack their business. You've got the amazing brand power, a distribution network that puts a Hershey bar within arm's reach of basically everyone, and these massive, efficient factories. It's a killer combo. But here's the deal. The bull case isn't just about looking backwards. The folks running Hershey are smart. They know the chocolate market isn't growing like it used to. So they've made this really crucial pivot. They're not just a chocolate company anymore. They are actively becoming a massive snacking powerhouse. The goal is to find growth in other aisles of the grocery store. And you don't have to take my word for it. The numbers show it's working. Their salty snacks division, with brands like Skinny Pop and Dots Pretzels, is growing way faster than their classic candy business. Now, if you're an investor, this is exactly what you want to see. It's a brand new engine for growth. And it's also a great way to protect themselves a bit when the price of cocoa goes nuts. And the last piece of the bull case, and this one's a big one for many investors, is what Hershey does with all the money it makes. They have this rock-solid reputation for giving it right back to their shareholders. Get this, for 16 years in a row, they've increased their dividend payment. That's more than just a statistic. It's management basically saying, hey, we are so confident in our business and our ability to make money, even when things get tough, that we're going to give you a raise every single year. And this quote really sums it up. The dividend is the bedrock. For anyone investing for income, you just can't ask for much better than that. So there you have it, the bull case. Total market dominance, a clever growth plan, and a fantastic track record of rewarding shareholders. Sounds pretty good, right? Well, let's flip the coin. Okay, now for the other side of the story, the bear case. And we have to start with a huge, and I mean huge, problem that's hitting Hershey right in the wallet right now. And listen, this isn't some analyst on Wall Street guessing. This comes directly from the top dogs at Hershey. They are literally warning investors that the price of cocoa is going to put significant pressure on their earnings. They're not hiding it. And just to put that in perspective, look at this number. Cocoa prices are up around 70%, not over a decade, but in 2024 alone. This is a massive, historic price surge. It's a direct assault on the profitability of their main business. So what does a company like Hershey do? Well, they raise prices. But you have to look closely at what's really happening here. In 2023, their sales numbers looked pretty good, up 7%. But that was only because they jacked up prices by almost 9%.
the actual amount of candy people bought, the volume went down. This is the dilemma, right? They're pushing the limits of that brand loyalty. At what point do people just say, nope, that's too expensive?
And that's exactly where this next problem pops up. When you and I feel the squeeze, we start looking for deals. And that often means checking out the store's own brand. You know, the private label stuff that looks pretty similar but costs a lot less. And this is not a small thing. Private label market share just hit a record high. That means almost 1 out of every 4 items sold in these categories is a store brand. For Hershey, that puts a ceiling on how high they can raise their prices. Go too high, and they risk losing a ton of customers to the cheaper option right next to it on the shelf. And it doesn't stop there. There are a few other headwinds to worry about. For one, almost all their sales come from North America, so they're not very diversified geographically. They're also fighting tooth and nail with other giants like Mars and Mondelez. And on top of all that, they're in the middle of this massive, complicated computer system upgrade. If that goes sideways, well, it could be a real mess. So it's a lot coming at them all at once. Okay, so we've got the strong bull case, and we've got the pretty scary bear case. How do you, as an investor, even begin to sort this out? Well, a good place to start is by looking at what you're actually paying for the stock. This chart gives us a pretty good snapshot. See the PE ratio? That's just a quick way to see how expensive a stock is. Hershey's is a little bit higher than its competitors, which is basically the market saying, yeah, we know there are problems, but this is a high-quality company, so it deserves to be a bit more expensive. But then you look at the dividend yield, and it's actually a bit more attractive, so the price seems to be balancing the risks with the quality. So, faced with all this, what's the game plan for management? Well, they're not just sitting around. They've laid out a very clear 3-pronged strategy. Number 1, keep using that brand power to carefully raise prices. Number 2, get lean. They're running a huge internal program to cut costs and save about $300 million a year. And number 3, use some financial wizardry called hedging to protect themselves from those crazy swings in cocoa prices. So at the end of the day, it all boils down to this. If you invest in Hershey right now, you are making one core bet. You're betting that the power of a brand like Reese's, combined with a smart management team, is strong enough to fight off one of the worst commodity crises they've ever seen. And that leaves us with the million-dollar question, doesn't it? Can that incredible pricing power actually defeat a full-blown commodity crisis? It's like the ultimate business showdown, an immovable object versus an unstoppable force. And how that battle plays out is going to decide whether the future for Hershey investors is sweet or very, very sour.